lot of people, I think, myself included, have started to feel like the markets are kind of on the edge of something's kind of big about to happen. And I got a few things that I want to show on that, but realistically, this is kind of the feeling I'm getting. I don't know if it's super, super bad, but I feel like something's coming up. And the reason I want to show this picture, if you guys don't know, my guy Ken Roxon had a shock explode during one of his last races. He was actually in the top 4, I believe, competitors for the actual Supercross Championship of the 450 class. Love Ken. That's a Suzuki. I have like almost the exact same bike as that. But his shock literally exploded mid-whoops, and this is the actual video of it, so I had to share it because this is... He almost saved this, but he actually tore up some bones, and he's actually done for the season, so I'm like super upset about it. But this is just crazy. So you see all the smoke, all the oil blew out of the shock, went on the engine, and he's committed. He's trying to hold on, but it's one of the craziest videos I've seen in Supercross. But he broke, I think it was a tibia, and some other things got fractured, and he's banged up bad. Cause this is slow-mo. He's going like 40 something miles an hour, maybe more, when this hit. But get well soon, Ken. We love you. So anyway, to start this off, this was kind of the big news this week. We'll start with TradeFi. Some of the stagflationary numbers came out of the US that was pretty actually damn far off estimates. We actually saw, let me see what this is. Units economy expanded. So QDP growth for Q1 was 1.6, trailing all forecasts. Main growth engine personal spending rose at a slower than forecast of 2.5 pace, but a closely watched measure of underlying inflation advanced at a greater than expected 3.7 clip. So it's pretty crazy that these were that far off, and it's kind of what spooked the market. And we saw the S&P take a bit of a nosedive this week based off of this. Like instantly this data came out and like it cranked. Now we had some like predetermined moves before where stuff was pulling back down, but the S&P, we guys have been watching this channel walker for quite a while, and normally I watch this on the H4, but the pivots up here are kind of like showing a little better on H1, so I'm looking at that. But this channel walk finally broke, and my sentiment on the S&P is this entire growth up was really the market thinking the money printer was going to come back online, and we ended up doing like a 20-something% run from this breakout of this down channel. It actually went from the bottom. It's probably like 25, 30. Let me see. I do want to see. I want to know. So yeah, about 30%, and we lost a tool on that one. Hold on. There we go. And we broke out of the channel walker, and you guys know how I am with channel walkers because I've been preaching those a lot the past few streams, because that's been the setup in TradeFi. We've kind of been taking the knowledge of these channel walks where we have the setup defined channel with the channel walker hugging directly below it. When we break south of this, we get the hell out of the way. I don't make up the rules, just these things tend to bleed out. We're going to review some of the crypto ones that played out later in the stream, specifically Ethereum, because this channel walker is still playing out on Ethereum, albeit we're months in advance of this. But the thing to keep note is the trend shifted. And when we first saw this, the last streams a few weeks ago, we were focused on this because we said the trend has definitely changed. Know that it's out of this channel. It's really, we're going to either keep moving down or we're going to do some type of consolidation and then either break up or break down. Those was really the two different options we had. And so far, it's been doing the first one. It's just kind of grinding out, which is a normal kind of what you expect with like a channel walker setup. And we actually got a bottom print on the H1 and we bounced a little bit, but so far the market data has not been so great. And it's one of those things where inflation is starting to kind of turn its head a little bit. In the wrong direction. GDP is slowing down. We're starting to see kind of the tickers that things pike up or move in the directions we don't want to see when we have these high of rates. So the market was thinking we were going to get multiple rate cuts here, money printer go brr, and it's not. It's looking now like the market's actually anticipating no cuts in 2024, potentially pushing it into 2025. Gut tells me, in my story the whole time, wait till Jerome comes out and says 0. He finally did that. Now it's wait till he comes out and says negative, which is going to be like negative 25, negative 50, and he's going to ease the rates back off because things are starting to break, and they're going to try to hold it as long as they can because the inflation stuff is just not going so hot. But leaving this chart, something I don't normally show is the MAG 7, albeit you count here, hey runner, this is 8. I threw in AMD because if we're going to look at NVIDIA and we're going to look at Microsoft, I kind of want to see AMD too. Albeit I should probably put Intel in here too, but I don't want to do 9. But the point is, your magnificent 7 aren't doing so hot. Google kind of doing the best out of all of them. They had good earnings. Amazon, considerable pullback. Apple's been bleeding for a while. If you don't notice, that's the channel walk that we caught earlier. Later last year. Like nailed that to a T. This is the exact same setup that the S&P 500 is doing right now. Big 20-30% move, channel walk. If I had all the tools on here, you could see it, but I'm on mini screen, so I don't have it. And then break out into some type of range, and now they're kind of just not looking so hot. Meta, the one that really went crazy this week. We actually have a BART setup with a bunch of gaps. Earnings came out, and everything nuked. Microsoft rolling over NVIDIA. The magical stock that does not stop finally stopped, believe it or not. And we followed this one as well because this was another channel walker that broke. And you can actually see the colors rotating out of this one as well. The colors rotating out. Now we're trying to find support. And dude, we're so high up. I don't know. NVIDIA is in a weird position though because they can't produce enough equipment for their demand. So I'm really, really bullish on NVIDIA. I like their hardware structure. They're going to really feed AI, but you have to notice these runs can't go forever. Just based on market caps. You can't print infinity market caps. It's just not a thing. So eventually these trends, if they're, when you see a meme coin going completely vertical, they can only do that for so long because otherwise they'll outpace Bitcoin and it's just not going to happen, right? Maybe one day Bitcoin gets taken out, but highly unlikely. Tesla been bleeding a long time, and you remember this last print at like $100, and you remember how evil the world was talking about how awful Elon was. We're actually starting to get that talk again right around here at like 150, 170. For the most part though, this one's just kind of been in a channel down, and it's just been bouncing back and forth while they bleed. And they actually went through a bunch of layoffs this week, which is, I don't know the history of layoffs at Tesla, but it's not a good look either way. Same thing, AMD bleeding out, not doing so well, full color rotation. So the point of it is S&P broke the channel walker. We're really trying to figure out how bad it's going to be. Inflation's not doing the best. Fed rate hikes looking like they're not going to happen. The other thing I'm looking at is the US 2 to 10 yield inversion. So this is the 10-year yield minus the 2-year yield. And typically, you can see this red line here. I'll make it a different color and make it larger. Typically, when this thing uninverts, and when I say uninverts, this is below 0. These ranges here are below 0 on the ranges, right? When these start going back positive and then the 10-year yield is more than the 2, it goes into the positive, and then we see these moves up on the yields. And if you've noticed on the charts, when it uninverts, we have a downtrend, right? So what I'm kind of trying to make the point, this is hard to do because if I do it log, it doesn't show up right, but the point is, and you can kind of see the one here where COVID went dumped and all my marks now don't align. Dang it. But you get the point. We're about to do it at some point here in the near future. We've been negative for a very long time on the yield curve inversion. Like I said, I mean, the 2-year yields are higher than the 10. That's starting to curl, right? And it's looking like maybe that's 2025. sometime, whether it's the end of this year or next year, we are eventually going to curve up through here and work our way back up where the 10 years higher than the 2. And we have to be really cognizant of the S&P rolling over. Will it roll over? I don't know. Is it going to do this every single time? No. There's times when it's inverted and it hasn't done so much. I don't want to call that the yield curve inversion dump there because that's really COVID. But the point being is a lot of people watch this. A lot of old school TradeFi traders watch this daily. It's like watching paint dry, but they get super skittish when this inverts. And it's going to happen probably in the next 12 months would be my guess. Like I said, this thing's very, very slow. But it's something we have to keep an eye on, because if you start showing weakness on the S&P and this inverts, it's going to spook out a lot of other people. So you got to be careful, because even if it's something to be scared of or not, if people get skittish and pull their capital from the markets, it can still drop stuff off. So it just is what it is. Anyway, what's up, Fletch? What's up, Bald Squirrel? Caleb? Sean? Not too much, Sean. You haven't missed much. We're only about 12 minutes in. Covering some of the stuff that's making me cautious. There's a lot of times where you just have to kind of watch and know something is potentially happening and seeing how it happens. So the inflation data that the Feds kind of watch, the Fed data is starting to show that it's picking back up, and I'm waiting to see if we actually see this on true inflation too. Hopefully you guys can hear me again. Sorry, might cut out. Yeah, I touched it. Sorry. So I'm trying to see what's going to happen here. If inflation starts creeping up on true inflation and it also starts picking back up on the Fed data, which is lagging, we're definitely not getting cuts this year. And if it puts the Fed in a really weird spot between a rock and a hard place, because they have to cut at some point, right? Or something, big things will just start breaking. They can't just increase rates nonstop. Big banks will start blowing up, and there's not much you can do. So we got to keep an eye on this. We got to keep an eye on the yield curve inversion. We got to keep an eye on the Mag 7, and we just got to stay frosty. We spotted a lot of stuff break these channel walks. Nvidia, Apple, S&P 500, and it's playing out to a T. So we've basically taken kind of these channel walker rainbow theories and applied them to traditional markets, and it's actually playing out to a T and working quite well. So moving on to Bitcoin.